Good afternoon, all. Camelback Trading 2724 coming to you this Monday afternoon, June 15th. We're looking at the last 3 days of the SPY ETF market profile here on Window Trader. And yes, we're one time framing down for 3 days after a huge gap. But to me, it's a big victory for the bulls. The last 2 days, really, because the sellers attempted to push down on Friday, attempted again today, actually had a very small weekly gap, only to get rejected both times, Friday and today. We got into a gap from back in May, only to hold it and then go higher. You can say whatever you want as far as J period when the Fed came out about that bond buying. Regardless of that, the only thing that do was got the market up to its high earlier than it would have, because J was all set up to probably take out eyes low, fill the single prints there, get an afternoon pullback low, and then go make a new high. So because the market had reversed itself, all it did was exasperate the move earlier. We have a trend day up. Look what transpired today. We had a weekly gap lower with lower value. We went from that getting filled to overlapping a low value to unchanged to overlapping to higher value and a trend day up. Took back all of the trend day from the 12th. We have one single print left on the 11th for the trend day down from the gap day. And we have two sets of single prints that held today. So pretty impressive for the bulls, even though you can consider it one time framing down. I had an excellent day today, and I did not make a trade after I period. Had an awesome day today. Did not make a trade after I period because of what happened in J. I was looking to take a long in J. But however, I called the market very, very well, which helped me and hopefully helped my room very well. So what did we do? We have a triple distribution day. We have a trend day up that holds. A period opened on a small gap, filled immediately. Got back below the opening, got back above the opening, back into Friday's range, took a long, worked out very nicely. B period. And the next couple of time frames did something very unusual. B period rips above A, but I mean got extension tremendously. Now remember, at the time, we had lower value. The indices were down fairly big at this time. So I thought the odds, because everything's about odds, about B, but this was like a 10-10 B hit its high. I'm like, for B to sustain this, we're going to have a huge set of single prints. Are we going to have that with value lower and the indices down so much? I didn't think so. So I took a nice put play. Worked out beautifully. I wasn't looking for the market to totally roll over, but it worked out. Same thing in C. Now, C period did a total reversal. It came and took out B's low and then ripped back up. But again, I didn't think single prints would hold. And we stopped the one-time framing up. Took a short, worked out beautifully. Buyers and sellers were getting paid all morning. Whether you went long or whether you went short, you were getting paid. However, things changed as we went on. We never saw the opening after A. We never saw below Friday's low after A. So things were definitely changing. So even though sellers were getting paid, okay, buyers were getting paid, and buyers were certainly turning to be the right move. And I said that. I said one of two things is going to happen here. Either we kept making now remember, I'm in 10 tick increments here, 11 tick increments. If this is in ones, we kept making very, very large extensions from the previous high. We did it in B, came back, did it in C, came back, did it in D, came back. I said, so one of two things will happen. These extensions can't keep getting that large. If they continue to be that large, we're going to have a trend day up, or they're not going to be as large, and now you're going to be able to fade the highs right back. Well, it was obviously the first thing I said. We finally went trend. And I took a nice long period in D when it came back. E started. I'm like, you know what? As long as I'm one time framing up, I'm comfortable. I added when it came in. We had singles. Those got filled. Turned out to be a very nice play. I didn't know at the time, though, if we were going to start trending, right? So then F period goes trend, right? And that's when I got out of, I'm trying to think when I got out of that long. I forget. I'm not sure if it was E or F, but it was a very nice trade. I think it was E because I wasn't sure if we're going trend yet. F pulled down. I could have done the same thing in F, but I wasn't sure, right? We didn't have single prints yet. E popped, starts running. Now it's like something's definitely changed. I'm not going to chase, but I'm not going to short it, right? My last short was in C period at the time, okay? So I watched F, G, H, now I. I started, we had singles. I said, if I doesn't take out H's high to come back, maybe I take a short against the singles. And I did. It didn't fill the singles, but it almost basically did. I got out. The next thing I said was J. If J doesn't take out I's high, I'm going to take another short because the odds of taking out I's low, filling this set, and then getting an afternoon pullback low somewhere here in G before we hit the other singles were going to be very good. Luckily, I got out of that short because J period open, and then before I could even say anything, J ripped higher because of that Fed announcement about the bond buying, which, by the way, is months old. They just started implementing it. So all this did was give the market the move it was going to get anyway at some point, as far as I'm concerned. Because if this didn't come out, Jay would have probably done what I said. It would have paid off nicely to take a quick short, would have paid off even better to take a long for an afternoon pullback low and go up. Algos took it up prior to that. They got all skittish. I'm like, that's it. I'm done. And you can tell that's what it wanted to do because look what we did the rest of the day then. K made a new high, but then L&M tried to pull back. We had another set of singles that got filled. So the market just got too ahead of itself because of that news. It was going to get there eventually. I firmly believe that. But it turned to be a good day. All right. Destinations for tomorrow. Upside 308.28, today's high. Then we have 309.08, Friday's high. Then we have the single prints from the 11th, 309.57 get filled at 310.01. And then we have the daily high of 312.15 and then the huge gap at 318.22, 607-point gap from June 11th. For the downside, we have the single prints, 303.80 get filled at 79. They're only 2 cents worth. They're in G period. Then we have the other set. They start at 303.05, G's low, and they get filled at D's high of 302.63. Then we have today's low of 296.74, and then fill in the gap at 295.63. 111 ticks now. They ate into it from May 26th. So if this is all the sellers could do, we might have taken out one weekly low and replaced it with another one if they can't get back down here. Now, let's go to the charts. Just going to do weekly and daily for today. So weekly, we take out last week's low, but get rejected out of it really quick. Yes, we took it out by a decent amount, right? 298.60 to 296.84 or 74. So almost $2 we took it out. But it spent no time at all there, right? We ripped back right up to it. So weekly now to me is balanced to down because we took out the low, balanced to down. But we are in this balance again. We stretched it, right? We're staying above 302.50. We're staying above, right? That was the important thing, right? We got below by a lot, right? By $6 and rallied $10 off of it. That's pretty impressive right now. Now look at the daily. 3 days in a row, we got below that 200-day moving average. Today, we got below it pretty good. Looked like we were certainly going to fill this gap. That was the next job for the sellers to do. They failed. I'm still calling it down because we are one time framing down 3 days, but you can call it a balance too. Again, this is all subjective. It's an art. It's not a science. But it is one time framing down, so to me, it's down. Now, I'll tell you what I will look for, if we're able to take out today's high tomorrow, with the expiration coming up, I actually looked late in the day at the 312 calls, which is basically this day's high. This is a huge gap. The odds of this gap getting filled the first time there are not going to be good. However, if we do take out today's high, I think we're going to visit it sooner rather than later. So for the bears to get back below the 200, to get back to attempt this gap again, I think the bears have to keep the one-time framing down going. If they don't, I think we're going to go and visit, at least test Thursday's high. That's what I'm looking at. I hope you had a good day trading. Remember, if you want a copy of the webinar, for people not in my room, send $20. If you don't know my Venmo or PayPal, just private message me, I'll tell you. Come check out camelbacktrading.org. We nailed this day on the head pretty good. We really did. Especially, even though a lot of people didn't get long when this market started moving up, we kept a lot of people out of trouble once it started going trend. And boy, did we nail that when it happened. Have a great day, great night. Hope you did well, and we'll speak prior to the opening tomorrow.